First and foremost, we'll cover the economic data that just broke a couple minutes ago. Number one, it was ADP private sector data coming in at 54,000. That's plus 54,000 jobs. That was weaker than estimates of 75,000. So again, a little bit of weakness here in the data for jobs and the labor market. In addition, we saw jobless claims, which are a weekly number versus ADP private sector, which is a monthly number. They came in a little bit higher. And remember, jobless claims are people filing for unemployment. So a higher number on that front is actually a bad thing. This was up slightly to 237,000 versus last week was 230,000. Now, keep in mind, history has shown us that anything below 250,000 is not really a big deal. That's pretty normal. But if we get above 250, then you start going on alert, and above 300,000, that's where things get a little bit crazy. All right. That's where you expect a recession, essentially. Okay, let's jump right into the charts. As always, folks, no BS, just charts here at Verified Investing. And what we see is the S&P futures overnight neutral to positive pretty much the entire time here. So this was yesterday's price action on the S&P futures. We opened again on the markets a little bit lower. We rallied higher. Then we came back in. We sold off. We almost came down and went negative. In fact, the S&P was briefly negative before a late day surge pushed us right back up. This is where we closed. So if we put a trend line right there just to show us in perspective about where the markets ended yesterday, you can see we are up slightly on the day, set to open on the S&P. Looks like about 8 points higher or so, maybe about 6 points higher on the S&P. Now, more importantly than that, we flip over to our daily chart of the S&P and take a look at this, guys. So remember the trend lines here that we've been following for some time. And we've been really watching this yellow trend line, the upsloping ascending trend line that's connected from the May 2025 lows to the June low to the August low here, and then also the late August low right over here. Now, we got a big drop coming in on Tuesday, which was the day after the 3-day weekend. However, the markets rallied back. We closed at or just below the trend line. Obviously, you can't confirm until the next day. And yesterday, they were able to save us. But look at this. Late in the day, before that late day surge, it was almost as if someone magically, with that power, came in and rallied us back up here to the upside to get us to close back above that line. And the reason I say that is because if you look at the intraday S&P, going into the final hour of trading, we were below that trend line. This is the 10-minute chart. And then you got that late 3-bar surge to the upside. And what a move to the upside there. Big pop to the upside. And that saved us, getting us to close back above this trend line. So what does that mean? Well, number one, even if we closed below without confirmation, it would not be a confirmed breakdown. But this basically rescues it for another day, meaning that now we would have to close below and then the next day confirm. So it really gives the market a little bit more time to hold the level and grind back up. We'll see what happens here. But I repeat, we have not confirmed a breakdown on the S&P or the NASDAQ 100. The S&P is back above its key trend line, so that's now on watch for a close below. The NASDAQ 100 has closed below, but has yet to confirm. Now, lastly, I do want to bring up the Dow Jones Industrial Average because this was very, very interesting, guys. If we look at this, you had 2 days in a row on the Dow with a trend line that goes back to April 7th, right here, and slopes up through the previous pivot low, and pivot low. 2 consecutive days we were below the trend line, and they got rescued each time, closing back above. But this is now a very important chart to watch. And the reason why I'm watching these charts is because essentially you could make a case, okay, well, let's say the NASDAQ. Tech stocks have really gotten ahead of themselves, so the NASDAQ could close below, even confirm. But if you get confirmation of breakdowns on the NASDAQ, the S&P, and the Dow, it's kind of like you can ignore one signal, but can you really ignore three matching signals? That would be more important. And again, that's why I'm keeping an eye on the Dow as well now to see what it does. Now, but the big one that I'm watching is the 10-year yield. So the 10-year yield, we got Beige Book yesterday afternoon. That was weak. And by the way, the Beige Book is a monthly report that the Fed releases, and it shows us essentially the strength or weakness in various areas of the US. And it was actually pretty weak. Pretty weak. So it probably pushes the Fed to give us that rate cut in September. That's what I would guess. But needless to say, the jobs data tomorrow will probably guide them whether they're going to be cutting in October or in later in the year multiple times. Okay. All right. So that's where we are at this point. Noticing again the breakdown here on the 10-year. The 10-year is now below this technical support zone. And if we close there, it might tell us that the 10-year yield is going to 4.05%. 4.05%, folks. That again would be your next technical level. That would be where I would expect the 10-year to go. And that comes from the pivot low in September of 2024, mind you, to the April low here. And that again, that trend line would be your next obvious downside target on the 10-year yield. All right, we got to get through some stocks here that are moving. Take a look at Salesforce. Salesforce reporting earnings that were okay, but guidance was weak. The stock is down about 7% in the early trading here. If we take a look at the daily chart, I do have one level that I'm monitoring on the chart, and we can see again, it's right between 227 and 229 for a trading opportunity today. We were down to about 237. We've bounced about $5 here pre-market off the lows. But this level today, if it flushes into this 227 to 229 level, CRM should see a bounce intraday, maybe even a bounce for a day or two. C3 AI, man, by the way, C3 AI getting crushed on earnings. If we look at this chart, I mean, look at this drop here on C3 AI. This is an AI stock. Obviously, the symbol is AI. But one of the things that I was kind of contemplating today is that if you go back to 2023, this was one of the first hot AI stocks out there. And remember, doesn't matter how negative a stock is, there will be a bounce at some point. Doesn't matter how positive a stock is, there'll be a pullback at some point. And what we see here, folks, is a clear kind of dropping trend line, descending trend line. And the level I have here is this 1375 level. So if it gets down to 1375, I may play it for a little bit of a technical day trade bounce. I don't know if I'll play it as a swing trade. Probably not. I'll need to see a few more days of price action. But 1375 on AI looks intriguing. I got to get to my trading room. Thank you so much for tuning in, guys. Hope this has been useful. I love you all. Thank you again for your support and your dedication to technical trading. All charts, no BS here at verifiedinvesting.com.